Awesome. So we've got over 100 watching already. So thanks for tuning in, guys. Obviously, we're going to do our best. There's people from all walks of life tuning in. I think the ATO might even be tuning in. So no pressure at all, Adrian, but we've got to do our
No
best.
problem. Great. Thanks for having me on, Alex.
So for those that don't know, Adrian's a guy I've got to know who I obviously trust, and I'll just bring your website quickly, cryptotaxoz.com.au. So how familiar are you with crypto tax now, mate?
Well, look, I've been in the space for a little while. I always remember a colleague of mine. Were walking down the corridor, and he said to me, "Oh, a mate of mine just bought Bitcoin for $1,000 at the peak back in 2013." And I turned around to him and I said, "Oh, it's a bit expensive." And here we are 5 years later. You know, and we sort of move on, don't we? So
Swings and roundabouts. Let's hope it
that's
doesn't
right.
go keep going down to $1,000 again. But mate, we're going to do some general advice, and a lot we've got to probably highlight legally that everything we say tonight is general in nature, and we want to
Yep.
give people a better idea of where to go to get more information, what category they might fall into, and also
hmm
help their own accountants or help their own research to better do their tax bill this year. Is that all fair to say?
Yep. Yep. No problem.
So we might start off with a few things. I know you've been talking to the ATO. I've had a chance to chat to them a little bit, but one of the things I want to highlight again is that they don't make the rules, and it's kind of everyone's rolling with the punches in this newly developing space, and they can pass on feedback, but we've got to do our best to interpret the laws and all that sort of thing. Anything to add to that?
Yeah. So look, it really does come down to the interpretation that you do give about the current law as it stands. And the ATO did come out. I think it was in March, gave an update of what they thought cryptocurrency taxation should look like.
Yep.
Based on that, there's a lot of accountants who have interpreted it one way. Tax lawyers who've interpreted it a different way. And as you sort of mentioned, Alex, in previous videos, hopefully they will be coming out with a little bit more guidance, because to expect the general public to just interpret the law as it stands, I think it can be a bit ambiguous at times.
Yeah.
So
So, yeah, from my communications with them, they ideally want to have something out before June 30. But probably another thing we should touch on is that you don't have to do your tax, then and there. You have to make all the finite, settlements of account by then. But what does an individual and what does a business have time frame wise to complete their tax return for those that are new to this world?
yeah, so look, if you do lodge your tax return by yourself, on your own accord, usually through something like My Tax, the ATO website, you have until around the 31st of October. But if you do register with a tax agent, provided that all your tax returns are up to date, you have usually to around the 15th of May the following year. So, it would be a good idea at least to be on the tax agent's portal, which will just give you a bit more time, during this time, and hopefully the ATO can come out with a little bit more guidance. And as it said, Alex, you don't have to do your tax return on the 1st of July. You can wait.
Yeah.
Um,
So it's not panic stations tomorrow, guys, ringing everyone up. But I'm sure there's going to be lots of people sought for advice because that's probably another takeaway message that guys seek professional advice. I know you sort of touched on then its interpretation, but you can't just interpret something one way and because it suits you better and decide
that's
you
right.
fall into one category. It's got to be consistent and it's got to be common sense. Do you want to talk about that a little bit?
Yeah. So I mean, the biggest thing, especially in crypto, everyone's situation is different, and everyone's intentions are different as well. And that's probably a key word of intention about: are you an investor? Are you a trader?
Yeah.
And there's a lot of different areas in crypto that have different tax implications. You've got your hard forks and airdrops and
Yeah.
ICOs and all those sorts of items that all have different sort of taxing points. And like you said, Alex, sometimes you do need to at least speak to someone who has experience and will give you the right advice.
Yeah.
Because at the end of the day, the the onus is on you to prove that this is
Yep.
the right tax treatment.
And we are going to talk about hard forks, airdrops. I'm going to touch a little bit on mining, a little bit on ICOs. But again, guys, this is all going to be pretty broad stuff to give you an idea. But it's more important about what category you fall into to begin with. So someone that's doing a little bit of investing, an airdrop or a hard fork for them is very different to someone that's a full-time trader. So again, it's probably more important to understand the sector that you fall into first. So do you want to talk about the most common questions you get and the most common categories people fall into?
Yeah. So look, probably the first the two would be investors and traders. And investors are probably pretty broad in terms of how they've invested and their intention of investing.
Yeah.
They would look to invest more long term compared to a trader who sort of looks at entry and exit points.
Yeah.
And investors usually like to look at the long term value of that cryptocurrency. And the only downfall obviously in crypto at the moment is the volatility. And sometimes it may look like you're trading a coin because of the volatility. We can see swings of 100% in one day and 20% in the negative the next. So
Yeah.
just because you are trading as such to a certain degree, it doesn't mean that you do fall into that trader category.
Yes, I mean, maybe a general way to explain that as well is it's on your intent to start off with. So if you bought Bitcoin and say, oh, my plan was to sell it if it doubles in 5 years, but then it happened to double in a month or 3 months, if you stuck to that plan, again, if it was on a hardware wallet and then you sold it, I think that's very different. People can't say that, oh, I was going to do this, but then I moved all my coins to a trading exchange and started jumping around and then claim that they were still... Does that make sense as well? You can't jump around and change what you're doing. It's got to have a clear intent and plan. Does that?
Yeah. So as I said, intention is always the key. You can change intention. Halfway through, there's a lot of clients that I've spoken to that have originally invested, and as time sort of went on, they said, I'd like to go into the trading game, and that's an event there, and there's different taxation laws around that, but you can change intention halfway through, a year, multiple times. It's just really coming down to the proof and your substantiation to the ATO about that.
Yeah, I was going to say documenting. If you're going to change your mind halfway through, you'd want to be documenting and have clear records of everything that you're doing. Is that fair to say?
Correct. Yeah. So, yeah, look, really putting the asset on yourself to prove your intention is going to be key if you ever need to prove that to the ATO. And the more evidence you do have, the more you have to back yourself.
Yeah. So let's go into an example of an investor who's just bought for the long term and they've bought some on an exchange and hopefully they've put it on their hardware wallet. If they haven't sold anything yet, they don't have to pay any tax. Is that correct?
Yeah, that's correct.
Yep. And I think a lot of people are kind of panicking a little bit. Maybe some newcomers, they hear all these scary tax crypto stories and they think, oh, well, what am I liable for? If you genuinely have bought some crypto and you haven't done anything with it and you still own it, that's pretty open and shut case.
Yeah, I would think so. Look, it really comes down to the ATO's release in March. They talked about the crypto to crypto trades, and a lot of people were shocked about that. Personally, I probably didn't see that they would be changing that or that would continue to go on.
Yeah.
You look at the US or you look at the UK taxation, and it's very, very similar to ours in terms of a crypto to crypto trade. So
yes.
So that's where a lot of people... Yep.
Yeah, so I think one way for people to get their head around that, and I think some people are probably holding out for the ATO to update guidelines and hoping that they're going to say crypto to crypto is not a taxable event, but guys, it is. And the way to think about that is if you're disposing of one asset, whether that be your Bitcoin or your Ethereum, you have a price that either has gone up or down from when you initially bought it. So that's a disposal event, and then you're reacquiring another new coin. And is that the easiest way for someone to think about that?
Yeah, that's right. So, as soon as you do sell a coin, there's obviously the cost base. This is for an investor, of course. There's obviously the cost base and there's the capital proceeds. And you obviously work out your capital gain, which is the difference between the two. what you need to understand is, that it can be a situation, and it's a very real situation, especially in this the market's played out over the last 6 months, is that in December, a lot of people would have made a huge run up of gains in November, December, up until about January 8th.
Yes.
A lot of people might be still holding on to some of those coins that they sold out at the top, but they obviously bought back in, so they've got a cost base which is really, really high at the moment. And this is, it's very real. I've spoken to a lot of clients that have been in this situation, and there's still time left before the 30th of June to have a look at your portfolio and say, look, I might be sitting on a large amount of gains that I've made through this run up, and there's been times where the potential tax to pay might be even greater than the portfolio that you have in at the moment. So
yeah,
it's a very, very real and scary thing.
And for those people, I know some people say, let's give some clear examples of someone that says, oh, you can't claim losses, and that whole misunderstanding of being able to offset losses against gains as an investor or a trader versus someone that's simply just sitting on losses, and you can't just take that off your taxable income as an investor.
Correct. So yeah, there's two sort of streams of in the law about taxation. That's income and it's capital. So if it's all on capital account, then those losses will remain there as carry forward losses, which you can utilize later on against any capital gains in the future. That's in contrast to someone who is a trader who's usually on an income account.
Yes.
Where they are able to reduce their other income from the potential losses that they may have made, during the last, say, 6 months or so.
Yeah.
So, just to make it clear, capital is against capital and income is against income.
And for someone that's not familiar with that nomenclature, you're talking about capital account. So that's people that fall into that category are maybe that casual, longer-term investor.
Correct.
So not someone that is trading for, as a trader, as a business carrying on. That's when you start to, offset gains and losses in that financial year versus that carrying forward if you're sitting on a loss. Is that correct?
Yeah, that's correct.
Cool.
Yep.
Now, if someone does work this out in their head and they are maybe sitting on a tax bill that's larger than their current crypto holdings, so it's not the end of the world if you're there's things you can do, such as you might have to be forced to sell that crypto to cover your bill, or sell some of those coins that are the bad performers back into Aussie dollars or Bitcoin. And again, that selling at a loss can start to offset some of those gains that you maybe didn't realize you were liable for at the time. So there's things you can do. Is that all fair to say?
Yeah, that's all fair to say. And that will happen. It'll be interesting to see over the next couple of days. If some Australians do that, we'll see if it does affect the market at all. It'll be interesting to see. But it does pay to really just have a real quick look, do a quick calc probably in your head, because you might want to reshuffle your portfolio. It might be a good time in this current market to flush out the bad coins and go, you know what, I'm going to go for these projects.
Yeah. And just on that point, we got to bring up wash trading. So I spoke to the ATO about this the other day, and it's pretty clear, guys. You can't sell all your coins just for the purpose of locking in a huge loss and then buy them back. Okay. As you said, if you got some bad coins and you want to move into Bitcoin or to some other good coins, that's fine, but you can't just sell all your coins and lock in a loss and then buy them all back. That's pretty clear wash trading, and again, intent and all those sort of things. You can have a pretty tough time arguing your way if you're clearly just doing that as a wash trading event.
Yeah, there has to be some commerciality to it. So, if your intention, and as I said, it comes back down to intention and what your actions are, and if you can prove that, look, your plan was to sell because of other reasons, it's all about up to yourself to substantiate that.
And would you agree a pretty reasonable sort of interpretation of that is a lot of people that got caught up in hype and bought some pretty bad coins might say, look, I'm going to move back to Bitcoin or Ethereum for a bit of safety. and to sort of gather my accounts into one place and just get my house in order after I got carried away with these coins that cost me a lot as a taxable event, and now I'm going to lock them in as a loss. Yeah.
Yeah, I mean that could be fair enough. We don't know where the bottom is in this current market, so you might want to say, look, I just want to, as you said, Alex, I might want to play it safe for now. You might want to move it back into Tether or True USD, for instance, until we can see some clear direction in the market.
Yeah, for sure, for sure. I'll keep an eye on these questions as well as we come in. So, someone's saying my microphone volume's dropping off. Is everyone else okay? No, sounds all right. Okay, so some of the questions that we get a lot. So let's talk about maybe hard forks to start off with. And again, for the average investor in that first instance we gave, if you're just buying and you're holding for the long term, you've obviously acquired a new coin with a cost base of 0. Is that all good? And that's the same for an airdrop as well. If you're getting a coin and you've got that longer term perspective, it's just a cost base of 0.
Yeah, look, that's probably the main argument at the moment until the ATO is probably more clear on that.
Yeah.
Some could see it as
the other side of the equation is if you're a trader in a business and so on, and you acquire Bitcoin Cash and it's worth $1,000, you've basically made $1,000 there, haven't you?
Yeah, and if you are a trader, obviously it's completely different rules, and that would fall under income as well. But the general consensus at the moment would be those hard forks would have a cost basis of 0. So when you do sell those, whether it be within 12 months, then you would be fully taxable on those.
And again, this gets pretty technical as well, guys. Now that Bitcoin's had 30 hard forks, so if you're new and you're holding some Bitcoin, you don't even really know how to get Bitcoin Cash. You're not you don't owe that technically. Whereas if you're someone that's tech savvy and you've claimed all 30 hard forks and sold them for a profit, and then you turn around and tell the ATO that you didn't claim all those where you have made money. Again, guys, it's up to you to keep records of what you did do and didn't do pretty clearly.
Yeah, so even for those people that might have bought in the December times, the January times, and they've run it all the way down now until June, it's still worth doing your tax return, because if you don't do your tax return, you want to lock in those losses in your tax return so you can utilize then hopefully for the next bull run that might be coming up, and offset any gains that you're going to make later on.
Yeah, sorry. When I said didn't claim it, I didn't mean anything to do with your tax bill. I meant didn't claim all those hard fork drop coins. I'm certainly not recommending one not to do their tax return. A similar sort of vein of thought is mining. If you're doing a bit of casual mining, you're acquiring coins with a cost base of such and such, versus if you're running a full-on mining business and you're claiming all your mining expenses and whatever, then those mining coins are sort of income. So is that, again, I don't want to get into specifics because everyone's so different, but you've got to have that understanding of anything that gives you coins basically has a cost base of 0.
Correct, yeah. And mining is just like any other business, and if you're treating it like a business, then you are entitled to your normal deductions and your hardware and the assets that you purchase for it, along with the light and power and all those sort of things that come with it as well. But in terms of actually acquiring the coins through mining, they are not taxable until my understanding is they're not taxable until you do sell those, which will eventually turn into income.
Similar to that hard fork, I guess.
Correct.
Instance. So don't mind me if I keep an eye on the questions as well, mate. I'm not being rude. Not keeping eye contact on our first date.
That's all right.
So other things that any questions that you get very commonly you want to mention as well?
Yeah, look, probably talking about, a lot of people ask about the personal user exemption, and I think a lot of people have misinterpreted that law that the ATO has spit out in their report.
Yeah.
A lot of investors have got advice from other accountants that if I only put in less than $10,000, I don't need to report any gains, or I've used it to buy a shirt or
Yep.
something online. Um, it comes back again to intention. Did you originally intend to invest, and then you've only used those profits
Yes.
to buy a personal asset?
And one thing that I kind of spoke to them about a little bit as well, and for a few accountants as well, was about that the definition of having an asset and having it in one address. So if I've got a little bit of play money on my wallet on my phone, and that's what I use to go and buy my Bitcoin, my coffee with a Bitcoin, it's very different to sort of saying, oh, I've got all my money on an exchange or all that my money on a hardware wallet that I was saying I was an investor. Now I'm going to spend that on a coffee. You're kind of chopping and changing your intent, as you said. So,
Correct.
yeah.
Correct. Yeah. I mean, you just need to be really careful about your intention from the start. And if, the ATO will look at the actual scenario. So, there might be an example where you can only buy a service using Bitcoin or another cryptocurrency. So that would be legitimately why you actually purchased that cryptocurrency in the first place.
Yeah.
And you need to be careful about how long until you purchase the original crypto and then to actually spend it. The longer that it goes on, the more it looks like you've actually just invested.
Yes. Very interesting as well. And I think that's probably something that's going to develop as we go forward as well, especially traveling overseas, if you can spend crypto in certain countries.
That's right.
A couple of things that we should highlight as well. A lot of people were sort of asking about gambling, saying, oh, this is just falls into gambling. And if you have a big win on the pokies or at the casino, you can kind of write that off. But that's not really the case at all with crypto.
Definitely not. The ATO's made it pretty clear that that's an asset. If you do want to take your crypto winnings and then go down to the casino down at Crown, you're more than welcome to. But those gains that you pulled out will be accessible, definitely.
Yeah.
So
another question we've got about transferring to a loved one or a family member, whatever it is. Any thoughts on that?
Yeah. So at the moment, probably our understanding about that is going down the lines of gifting an asset, which will be similar to the law that stands at the moment. Unfortunately, there is that would be considered a taxable event, as far as we're aware. You do need to be careful, especially if you're gifting to minors, because they have different rates, and you start getting into other complicated areas about them earning.
Do you want to clarify minors? What you mean by minors in the crypto world?
Sorry. Minors would be those under 18 years of age. So you might have a husband and wife with a family of 3 kids, and that they would like to gift it to their 3 children. They would obviously earn money through those cryptocurrencies, whether it be through buying or selling or a masternode or a mining. You just need to be careful because there's rules and regulations around minors earning income, those under 18.
Okay, cool. A few points and questions coming in, and something maybe we could highlight even more about the importance of record keeping. So I'm sure you guys offer, or what we've got coin tracking links in the description. But what do you recommend? Is that the best one so far?
Look, that's the one that's been around probably the longest. I know there's a few other companies that are trying to do exactly the same thing. We find that that's probably the best software at the moment. I know the ATO is sort of looking into those different softwares and whether or not it's suitable for them. But look, if you do want to save yourself some money and time, it's probably best to grab a coin tracking account, have it play around with it, get familiar with it. As I said, that's probably the best one. But you do need to be aware that accounting and tax there's always an audit trail, and when you're sitting across the room from the ATO and you're in an audit and they're asking you questions about where did this go and where did this withdrawal go and how was this deposited in this exchange or wallet. There's always a debit and credit in the accounting world, as we say. an in and an out. So you just need to be careful that you're all reconciled back to square one. And it sort of comes back to a point I wanted to make about this Saturday coming up, being the 30th of June. You need to ensure that you do take what's called a stock take of your cryptocurrency at that time, because you're accountant and you love yourself that you did do that, because you can work backwards to see what your point was at that time,
Particularly,
especially if you're a trader.
particularly if you're a trader. If you're the guy who's bought a bit of Bitcoin, Ethereum, it's on a hardware wallet for long-term investment purposes, and you know it's there, that's not so important, I guess. But definitely need to have that track of what you've got at June 30. So a few questions coming in. I mean, we didn't want to go into ICOs too much because it's so complicated, guys, but just in very general, again, if you've got Ethereum and then a year later you go into an ICO, you've disposed of an asset at either a gain or a loss, and then you've acquired another coin and it's got a cost basis at that time. Is that your understanding as well?
Yeah, that's right. I mean, getting into the ICO area is probably very complex. I don't believe the ATO has really nailed that one yet. We're still sort of waiting on confirmation from them to see what their interpretation of that is. Because I do get a lot of questions about when is the correct time of trade. Is it when you actually withdraw or dispose of the Ethereum, or is it when you actually physically receive it? And that question's sort of up in the air at the moment.
Yeah. Okay. Yeah. From what I gathered, it would be the date you dispose of it. That is one event. They're disposing of the asset for either gain or a loss, and then when you acquire the other asset, I guess in the future would be when you have the new asset on hand. Again, you do understand why this is so hard for accountants. We still hear accountants giving people wrong information, which is like someone today, getting misinformation. So you can't recommend the crypto accountants that are familiar with this enough, guys.
It's really important that you do go and speak to an accountant and get advice. I do see a lot of people trying to give tax advice on Facebook and Twitter sometimes. So, I've never seen that before. It's only in crypto. You don't usually go and ask a law question on Facebook to someone and really, trust that. But you do need to obviously look at someone and speak to someone that understands the space too, because of the complications that it can arise, and actually understand the space. So
just finally, mate, probably a good place to wrap up, and we've made that pretty clear about someone that's just buying and holding long term. What are the sort of criteria in terms of actual actions and intent that puts someone into that trader category?
Yeah, so look, there's a few areas that you really need to tick the boxes of, and there's no real one solution to it. The things that the ATO would really look at is repetition, and obviously your intention. Are you actually going about it in a business-like manner? Are you really putting in a lot of time and effort into trying to, basically survive? If this is your full-time job as a trader, you are really trying to sort of protect your capital. You're analyzing the market. You're looking at entry and exit points. How often would you be doing these sort of things? And there's no real sort of tick box where you can say, I really fall into that category. It's really going to come under a combination of items all together to come to a conclusion on that. But, if you do feel that you are in that trader group, you do need to prove that you're going about it in a business-like manner.
Yeah. Interesting. Any final thoughts, mate? I mean, we could sit here all night and answer questions, but it's been fantastic half an hour chat.
Look, probably the easiest thing would be try and get familiar yourself around the laws as well. Speak to an accountant that understands crypto, and make sure you get all your transaction data off all your exchanges and wallets and on all your wallet addresses as well, because that's going to be really important come tax time to reconcile back to what you can. And you've got a few days left to have an analysis of your current portfolio.
Yeah.
So take the time.
Keep an eye on the ATO community channels for those updates, if they do get those out before June 30, guys. I saw a Facebook group that's specifically with all crypto tax accountants as well. A few websites, yours, mate, Caleb and Brown, have got a tax tool now. So they're coming. Hopefully this time next year, every man and his dog's got a tax tool or a website or a program to run it through and do it for you, because there's no doubt that it is actually a fair bit of work to do.
There is.
Leads me also to believe how early are we on it in this space. And like a lot of things, for the people that took the time to learn how to invest in an ICO, a lot of them reap the rewards. And if you take the time and do all this right with crypto, I believe that you're going to reap the rewards long term. So wrap it up
That's
there.
right. Thank you.
Awesome.
Thanks, Alex.
Thanks for joining us, Adrian. Cheers, mate.
No worries. Thank you.
Cheers.